Hi Fools, my name is Rich Griefner and joining me today is Jan Loeb, CEO of Acorn Energy. Jan, thanks for being here.
Rich, thank you very much for inviting me on.
Yeah, well, happy to get started. So, with a market cap of just $45 million, Acorn Energy is the smallest company in our Nano Winners portfolio and possibly the smallest company the Motley Fool has ever recommended. But we see big potential in this tiny company. Acorn has sustainable competitive advantages, it has a high margin recurring revenue business model, and the company has some exciting growth drivers that we'll dig into in just a moment. But Jan, let's start with the basics. Can you please walk us through the business? What does Acorn Energy do, and how does the company make money?
So Acorn does remote monitoring of industrial equipment. So we sell a box. Our biggest product is a box for backup generators, and we monitor that box for our customers to make sure that, in the case of generators, that the generators will work when they need to work. We also monitor air compressors, rectifiers. Rectifiers are a product on the top of a gas pipeline that makes sure there's electric current running on the gas pipeline to prevent corrosion. So we sell a box, so we have some equipment sales, and then the key value driver in our company is the recurring revenue stream that we get off of monitoring those boxes.
Yeah, that's exactly right. And the recurring revenue stream that I referenced earlier, that's the monitoring revenue. The margins there are simply incredible. Is that right? It's about 95% gross margin with a 90% customer retention rate?
Correct. And that's without contracts. So we don't even have when we sell the original piece of equipment, we have a 1-year contract with the customer. After that, we don't even have any contracts. But since they have already an embedded piece of equipment that they've spent money for, and it is the best piece of equipment in the marketplace today, there's no reason for them not to be using it and to monitoring it on an ongoing basis.
Yeah.
So you're correct on those, and you're correct on the margins.
Yeah, and you guys primarily serve two types of customers. Yes, you've got the residential customer, and I believe when you took over as CEO, residential customers formed the vast majority of Omnimetrix's customer base. But today, more than half of revenue comes from commercial and industrial customers.
Correct, Rich. And the company was started 28 years ago by Harold Jarrett, who still works at the company, and it was started on the residential base. So that's where all our customers were, residential. And as a matter of fact, we used to make all the monitors for Generac for many years, and then Generac took it in-house. But residential was our business, but over time, I saw that really we needed to focus on C&I because that's where the growth is, and also that's where competition is the lightest. So we've moved very much into that area over the last 5 years.
Yeah, that's right. And I realize I may have introduced a term that we hadn't introduced previously, where the monitoring business is Omnimetrix, and Acorn Energy is the holding company that owns Omnimetrix. So I guess in this conversation we can use Acorn and Omnimetrix interchangeably.
Correct.
Yeah.
Acorn at one time was a holding company for 4 or 5 companies. Today we've slimmed down and we only own Omnimetrix.
That's right. And you touched on this a bit, but I'd love for you to elaborate. What do you consider to be Omnimetrix's core competitive advantages?
So number one, we have the best machine in the business. And that's because we're a monitoring company. That's all we are. So our competitors, let's say our biggest competitor is Generac, who sells their own generator plus their own monitoring system. But in fact, they're a metal bending company that they sell generators. Okay, all we do is we sell monitors. So we have to be up on the latest technology in terms of monitoring, and that's not just software technology, but it's about what customers want in a monitoring system. So, for example, air quality. Today, people want to know about air quality. There are some municipalities that don't allow generators to run on a bad air day. We've put in our software that does not allow a generator to turn on a bad air day. So that's just one example. Because that's all we do is monitoring, we have to be on top of everything that's going on in the industry, and so therefore we have by far the best products in the marketplace.
Oh, thank you. And then one potential advantage that you might have in customers' eyes anyway is Omnimetrix is brand agnostic, where if you're going with Generac, that they can only provide the monitoring solutions for Generac generators, but Omnimetrix is brand agnostic. Can you speak to the importance of that?
Yeah, so you're 100% right, Rich. Our monitors go on all brands of generators. So whether it's a Generac, Kohler, Briggs & Stratton, MTU, any brand of generators we have a product for. So so it's good for for our dealers. So we have over 600 dealers that sell that we consider to be our customers, and therefore use our product and sell it to their end customers. They like us. Number one, they keep less inventory because they only need, if they sell multiple generator brands, they only need us and for their inventory. But also, the fact is that there is a tension between the dealer and the OEM as to who owns the customer. So the dealer feels he installed the generator for that customer and he services that generator, so therefore the customer belongs to him. The OEM feels that the customer bought his OEM generator, and so he owns the customer. So let's selling parts. Sometimes the dealer wants to sell the parts. Parts are very profitable, or the OEM wants. So the dealer would rather not have the OEM involved in the situation and know who the customers are. With our monitors, that's the case. The dealer is our customer. We have nothing to do with the OEM. So I would say that given the choice, which they don't have, but 100% of the dealers would rather have an Omnimetrix monitor than anybody else's.
Yeah. And then how common would you say it would be for a large commercial or industrial customer to support multiple generator brands and then therefore really benefit from that brand agnostic solution that could monitor all their generators?
So large customers sometimes put out RFPs, request for a proposal, and so let's say you're a college. So this year your budget allows you to put up 5 new generators, so you put out an RFP, and the dealer who sells Generac wins this year's RFP. The next year they have another 5, budget for 5, and the Kohler dealer wins that RFP, but the facilities manager has to be able to talk to all of them. So he can't put in a Generac monitor which doesn't talk to Kohler, or Kohler that doesn't speak to Generac, but he can put in an Omnimetrix monitor which talks to everybody. So that would be a perfect example as to, on the C&I business, one of the advantages that Omnimetrix has.
Thank you. I benefited from that example. Thank you. I appreciate that. And demand for backup generators has really been rising, and you guys benefit from some pretty favorable macroeconomic tailwinds. Can you talk about what's really driving demand for backup generators?
Yes. So there are a number of factors. So factor number one is that people do not have the belief that the grid is always going to be providing them with energy. We've had a number of situations. There's more blackouts, brownouts, rolling blackouts that have hit the United States over the last few years. And so therefore, because the grid is fairly old, so therefore people question that, and therefore they want to have their own backup generator for their own power. So that's number one. On top of that, adding to the grid issues is data centers. Data centers are using up a lot of power, and so therefore just the use of electricity and the price of electricity has been going up, and so people again feel much more comfortable buying a backup generator. Then you have storms, winter storms, hurricanes, that have put people on edge, not having power for 2 or 3 days. Backup generator is the answer. And then lastly, just in general, people are working more at home. And so they want to make sure that they have electricity at home. People want to make sure that their cell phones are always powered up. So, just the reliance on electricity today is much more so than it was, 5 to 10 years ago.
Yeah, well, as a new Florida resident who works from home, that was a pretty convincing sales pitch for me to start researching backup generators. So thank you.
Make sure you put on an Omni monitor, okay?
Of course. So those are some macro tailwinds that you guys are benefiting from. But you guys are also, Omnimetrix is also pretty proactive with some growth drivers that the company is initiating. In fact, you guys are working on at least 5 major initiatives. I'd like to ask you about them one by one, if we could. Let's start with the telecom contract. So in June of 2024, Omnimetrix announced a $5 million contract. It's the largest deal in its history to monitor backup generators for a major telecom provider. This was a competitive process. You guys won. Why do you think that customer chose Omnimetrix?
I think the number one was because we have, the best product in the marketplace for generator monitoring. Number two is we have great tech service. So if there's a problem, you call us, and you're not calling the Philippines, you're not calling India, you're calling us here in America, and we'll work you through any of your issues. So I think they felt very comfortable with our tech support. Also, price. They certainly negotiated hard for price, so I'm sure that they were happy with the price that they got. So putting all those together, I think that's what allowed us to take that contract.
Yeah, thank you. And $5 million, it's not so much for the telecom company, but it's a massive deal for Omnimetrix. And you've previously said this contract does not represent the full potential with this customer. So is expansion still on the table?
Definitely. So, well, firstly, recognize that that we'll continue to see monitoring revenue from that contract. We've said we've installed between 5,000 and 10,000 monitors. So we're going to see ongoing monitoring revenue for that for hopefully well into the future. But also, yes, we expect, and we have certainly seen that even post that contract, we're getting orders from that company. They're growing, so they're putting more units in the field, and so we expect to have add-on business. Nowhere near the $5 million, but we do expect to see add-on business.
Yeah, and
I just want to say basically we've completed the $5 million contract, and so there is some downside to that $5 million contract that I just want to make investors aware of, and that is while we have a great growth story and we say that we on average can grow about 20% a year, that's on average. What's going to be tough to when you have a $5 million contract that we've delivered over a 4-quarter period to continue off of that level for the growth. So we expect, and you've seen in our third and fourth quarters, a dip back to what I'll call a more normal level, and then hopefully we'll get some more of the contracts and more business, and then continue growth from there.
Yeah, well, to paraphrase Warren Buffett, I'd rather have a lumpy 20 than a smooth 15, right?
Right, exactly.
So that's the first growth driver. The second growth driver is actually the one that it sounds like could be the most meaningful, and that is earlier this year, Omnimetrix announced a strategic partnership with AIO Systems, which you described as having the potential to transform our company. So that sounds pretty exciting. But what exactly does this partnership entail, and what could it mean for Omnimetrix?
So AIO provides a monitoring system for telecommunication towers, utilities, and data centers. So let's go back in history for a minute, and that is we used to provide all the generator monitors for American Tower, ATC, and then ATC, who was very happy with us, came to us and said, "We'd like you to monitor the doors in our cell towers for security reasons." And by the way, this was before my time at the company, and we were unable to do that. We stuck to our knitting. We do generator monitoring, and so we lost ATC as a customer. ATC is a great company, grown very well. So it's always been in my mind that we need to monitor other things within a telecommunications tower. Every telecommunications tower has, up to 3-4 generators, depending on how many tenants the tower has. So it's certainly a big factor in the generator monitoring business for us. So we need to have other products that we can do. And AIO, I've looked at all the competitors, and I felt that AIO has the best product for telecommunication tower monitoring, whether it's security, battery, rectifier, solar. They monitor everything in a telecommunications tower. So I think it would be a great fit for us. So we structured this deal where we have the North American rights to their technology. And so the interesting thing and why I think it could be transformational is it's just so much larger than we have. So, our typical, monitor box we sell is maybe $500. And then we have ongoing monitoring. The sale of a telecommunication tower, could be about $5,000. So just the numbers are much larger. Our deal is we have to split some of the money with AIO. So I don't want your, investors to think that all falls to Acorn. It doesn't. But a big chunk of it does. And so I think it has that capability. And they have just great products. We have two demo units up and running now, so we can show potential customers how the system works, and we'll see. We've said that we're not going to have any revenue for the first 6 months of this year from it, but hopefully, we'll get some customers, and we'll see what happens.
Yeah, thank you. And you're talking about the applications within a cell tower, which is great, but I heard you say the word data center before, and I know some viewers' ears might have perked up a bit at that. So tell me what AIO can do for you guys in entering into the data center space.
So the same pieces of equipment that are in a telecommunication tower are usually in a data center. So we can monitor everything that's going on in a data center as well. The reason why I'm focused on telecommunications towers is because the telecommunication guys are our customers already, meaning a lot of them have our generator monitors in it. So we don't have to make a cold call to the telecommunication company guys and say, hey, we're Omnimetrix, we're this, we're that, et cetera. Most of them know us already. Most of them who have our product feel that we're very reliable. We have a great product, so they feel comfortable with us. So that's going to be the area, the industry that we're going to attack first. Yes, data centers is, fast growth, it's sexy, but I want to go with the tried and true first in an area that I think, we have a leg up, an advantage to sell. And after that, we'll certainly go after data centers.
Yeah, makes sense. AIO is, it's a global leader. They've got deployments in 100,000 sites in 15 countries. Why is it they couldn't crack the U.S. market on their own?
So they never tried cracking the U.S. market, and which I think was the right decision for them, because the U.S. market doesn't suffer from the same issues, or has not suffered from the same issues that, for example, they suffer in Africa. Africa is their biggest piece of business, and that is from security. So in Africa, people break into cell towers, steal the fuel all the time. So therefore, they felt, the telecom operators needed some serious security at their cell towers, and AIO had a solution. In America, that has really not been a problem. Theft has not been a problem. But I believe that is changing, and in fact has changed. So if you look at some of the data that we've spoken to in the cell phone companies, theft from cell sites now are north of $100 million easily for one cell company. So if you add all the cell companies up, it's a serious theft. Copper is now really the biggest item that thieves come and sell because copper pricing is up significantly. That's what they're after, and there's a lot of copper in a cell tower. And then also the fuel. I mean, diesel's over $5 now. So we think that just in general, security at a cell tower, because they're at a remote site, you don't have people there protecting it. So we think security at a cell tower is going to have to be upgraded over the next few years. And then you get everything else also, saying other things like battery management and other things that are important, our system does as well. But I think security is going to be the reason cell phone companies and tower companies are going to start to upgrade into a system like AIO's.
Very interesting. Thank you for that. I hadn't heard that. And then last question on AIO. So the press release mentioned that Acorn envisions the potential for AIO to sell its monitoring technology in certain global markets. That's kind of the global is kind of a new aspect. Is Acorn on a path to eventually becoming an international company?
Not on purpose. Okay, so we think AIO, who has a global sales force, which we do not, there are many instances where they are talking to, take a telecommunication company with a cell tower company, where the customer wants to have their generator monitored but doesn't want to have everything else monitored. So if that would be the case, it pays to put our system in versus their full-blown system. So our deal with AIO is, in those instances, they would be selling our monitoring solution to their customer. So that's what we envision. We've never really gone after the global market because we didn't have the infrastructure. We don't have the infrastructure to do that, meaning we would have to have tech support, different hours, different languages, et cetera. And as I said, our tech support is here in America. So it really hasn't paid for us to go global with our solution. But using AIO, it makes a lot more sense.
Great. Well, it sounds like that's a potential opportunity for down the road. But first things first, let's focus on these cell tower customers, yeah?
Correct.
Yeah. All right, moving on from the AIO relationship, Omnimetrix is pursuing opportunities with large commercial and industrial customers. And these are big contracts, but that means they have long and complex sales cycles. So Jen, can you walk us through the sales process? Like, who is the decision maker at the company? How long does the sales cycle typically take?
I wish I knew who the decision maker was. That's the problem. But typically, it's most probably a 6-month process from the time that the company does their own research as to who can provide the products. They put out an RFP, or request for a proposal. We answer it along with a bunch of our competitors. Then we have conference calls. Lawyers look at things. We maybe put up a few proof of concepts. We give them a couple of trials so they can see, exactly how the system works and that it's worthwhile. And then they make a decision. So it tends to be a lengthy process, but worth it at the end.
Yeah, it sounds like a lot of work. It'd be nice if you could just install your monitors from the get-go. And that's kind of the thinking behind initiative number 4, which is integrating directly into the generator at the OEM site. So as you mentioned before, right now, Omnimetrix's monitors are installed in the aftermarket by a dealer, but you guys are hoping to move up that chain and build your tech directly into the device itself. What is the potential opportunity here, and what kind of hurdles have you guys run into?
So first, let me go back and say, why hasn't this been done up until now? And then what again, these are my opinions, and what is changing in the marketplace and how we hopefully will position ourselves. So if somebody, let's go back to my college case, okay? This college wants to buy 5 generators, so they go out to a dealer, and a dealer gives that response to the RFP, gives them a price. Now, in the RFP, the college does not ask for monitoring. I mean, they just say, we want to buy 5, 50 kilowatt generators. So company A has a generator that's just 50 kilowatts, gives them a price. Company B happens to have a much better generator because that generator already has monitoring installed in it. That's going to be at a higher price because it has monitoring installed in it. But the RFP didn't call for the monitoring, and so the lower price guy always wins. So therefore, the guy without the monitoring is going to win that RFP. Okay, so unless monitoring gets spec'd into a contract, it doesn't pay to have monitoring built in. Monitoring has grown so much over the last 3 to 4 years, which is going back to one of the growth factors in our story is, if you go back 5, 6 years ago, monitoring wasn't a big thing. Today, you have Nest, everything is being monitored, and people are much more used to it and now want to have it. They have it on their cell phone. They have an app that shows everything that's going on that they can control. So monitoring today is a much bigger and necessary item than it has been in the past. And I think over the next few years, it's going to be even more so, where there'll be some point that every RFP is going to say, we want to have a monitor, we want to have a generator with a monitor included. So I think over time, the OEMs are going to want to have monitors embedded in their machines. And again, that's our business. So yes, can OEM guys come up with a monitor? Yes, they can. Does it work? Yes, it does. Is it the best? No. Do they have the best tech support? No. I think that we are very well positioned to do a deal with an OEM to provide them monitoring, both aftermarket and eventually, hopefully, in an OEM embedded capacity.
Yeah, that's exciting. And then fifth and final growth driver, acquisitions. You've been open, you've been pursuing acquisitions for years, and it sounds like you came close a few times, but nothing ever quite made it to the finish line. What are you looking for in an acquisition target, and what has been keeping you guys from getting that deal done?
Okay, so that is all me and my fault, okay? I take the blame. So firstly, let's understand why acquisitions has been something that we want to do. Obviously, you want to get bigger, but also we have over $60 million of net operating loss carry forwards. So we have a tax shield. So the faster I could use those NOLs, the more valuable they are. So making acquisitions into our NOL shield makes a lot of sense. The problem is me. So if you know my history, I'm a Wall Street guy. I'm a value-oriented individual. So I tend not to pay up for acquisitions. And in this sector, companies with ARR, renewable revenue, are expensive. So I haven't been able to, get the right acquisition at the right price, and so that's been my problem. Now, I've said I will only buy a company that has a monitoring kind of a renewable revenue stream. So because that fits with what we know. Um, so to date, yes, we've come. I don't even say we've come close because we've certainly bid on a bunch of companies, but private equity has outbid us in every turn. But we'll see. We'll see what happens.
Yeah, and then in the meantime, the cash that you've saved from not making those acquisitions, you built up a decent amount of cash on the balance sheet, but probably not enough to finance a meaningful acquisition. So what's your thinking on potentially using debt or equity to finance a deal?
So I'm all for using debt. We are debt free today. We generate cash from our business. So that is certainly a very good instrument for us. Would I use equity? If the equity was trading at the right price, I certainly, have no problem using equity. And obviously it depends on, what we're buying. If we're buying a company that the management wants to stay on and continue to grow and understands the value of our equity, I'm all for that and would use equity. The situation hasn't come up, but what we've, I'll give you this example. AIO was something that we looked at first as a potential acquisition, and then decided against that, but rather did for very little money, got the North American rights for it, which, hopefully will turn out to be great. So just by looking through acquisitions, other potential opportunities arise.
Yeah. Well, as a fellow value-oriented investor, I appreciate I appreciate you taking care of shareholders' capital like that. And you are a large shareholder yourself, so you're really watching out for your own money.
Correct. I own a little over 20% of the company, so I'm in no. I don't need to grow the company for the sake of growing the company. I don't want to dilute myself in terms of value. So we hopefully will do a smart one when we do one.
Yeah, well, let's hope so. Now, you mentioned you started off on Wall Street. Your path to becoming Acorn's CEO was unconventional. Can you share that story with us?
Sure. So it all started out by me being a very nice guy. A portfolio manager called me up and said, Jan, I own a big position in this company, Acorn Energy. Could you do me a favor? I live in Baltimore, and the company was headquartered in Wilmington, Delaware, which is an hour away. Could you just go and see the CEO and tell me what you think? So being the nice guy that I am, I said, sure. Drove up in the middle of the winter, met with the CEO of Acorn, went through the companies. At that time, they owned four or five companies, and decided that they had 2 good companies and 2 to 3 bad companies in the portfolio, and I thought that they would run out of money in 6 months or so. So I told that to the CEO. The CEO said no, they would not. I said, just in case you do, here's my number. You should give me a call. Okay, I left. After an hour and a half, called my friend, the portfolio manager, and told him what I thought, that they'd be running out of money and he should sell the stock. I don't know to this day whether he did or he didn't, by the way. Sure enough, 7 months later, the CEO calls me, asks if my deal is still on the table. I said, look, I can't, on an hour and a half meeting with the CEO is not called due diligence. So I visited the 2 companies that I thought had the most potential, which was Omnimetrix, one, and a company called DSIT. And I thought that they had real potential and real value. And so I invested a couple $1 million into the company and went on the board. And I saw what was going on the board, and the CEO, and basically the CEO retired in 2016, and I took over. And I figured, for 25 plus years on Wall Street, I was telling, or really close to 35 years, I was telling management how they should be running their company. Maybe I should get on the other side of the desk and try it myself. So that's what I did.
Yeah, well, I mean, many of us investors, yeah, we think we could run the company better, but you've actually had the opportunity. So after a decade as CEO, how has your experience at Acorn differed from your initial expectations?
They haven't differed much. I mean, I think it takes longer. Meaning, when you're an analyst or portfolio manager, you think that things can happen relatively quickly, and in fact, sitting on this side of the desk, that's not the case because curveballs are thrown at you that you don't expect. COVID is just an example. When we started here, bingo, COVID came. Then there was a transition from 3G to 4G. So there's been a bunch of curveballs that have been thrown at us, and I'm sure thrown at many companies. And so I think that we on Wall Street underestimate the time it takes for things to get done at a company, and like similar to getting a contract, the sales cycle, things take longer than you think.
Yeah, and that's even true. I mean, it's obviously true for big companies with lots of bureaucracy, but Acorn, you guys only have 27 employees, so it's true even at smaller companies. What is it like to work at Acorn? What's the culture like?
So, I mean, today Acorn's really Omnimetrix. I mean, it's Tracy Clifford and myself are the only two people who work at Acorn, so to speak. I mean, Tracy and I go back over 25 years together. We've known each other since I took a run at a company called Golf Trust of America back in the 2000s. We're in Beaufort, Georgia. It's a beautiful area, and everybody, I would say, really, we're family. I mean, we've been together for many years. Culture's great. We have a ping pong table in our office. So I think everybody likes it here. We haven't had people who quit. We've had a couple people who retired. Unfortunately, some people die. But overall, I think we have a great culture here.
Happy to hear. You're an investor. We're investors here at the Motley Fool. Can you tell us about an investor that you admire?
I mean, there are many investors I admire, but I would say just because of what's happened recently, I'd say Murray Stahl, who just passed away recently at a relatively young age, was a great value investor, and I'm happy to say he was a client of mine when he still worked at Bankers Trust. Early on in his career, but I thought he was a great investor and just a great guy. Low key, I like low key guys who get the job done, and just because he passed recently unexpectedly, I think his memory should be a good one, and he was a good guy, and a good investor, and a very good investor. Right.
That's right. Well, R.I.P. Murray. What is moving on? Let's just hit the lightning round real quick at the end. What is one thing about Acorn you think that investors underappreciate?
The name. Okay. So, again, my fault. But nobody knows that we're in the remote monitoring of industrial equipment. That 50% of our business is renewable revenue. Most people think Acorn Energy. We own an oil and gas leases in the Permian Basin. So I'd say that's one of the things. And I've toyed with changing the name on and off, but so far we haven't done it. Yeah. But I think we need to eventually let people know what we actually do.
Yeah, so stay tuned.
Right.
Yeah. What do you consider to be the biggest risk to the business?
I don't know. I think that's hard. Just maybe lack of execution. I mean, you know, we need to execute every day. Our salesmen need to sell. Our production guys need to produce quality product. Our engineering and IT, you know, IT is very important, so our software has got to work. So I'd say the biggest risk here is not a macro risk, but a micro risk on execution.
Okay, that's a pretty good risk to have, I'd say. And final question, Jan. It's the year 2031. What does Acorn Energy look like?
I have no idea. I mean, my guess is that the company will be sold by 2031. We're in a hot area. We're leaders in the field. At some point, some company strategic with a strategic fit is going to say, we really like this company, and will offer to buy us. That'd be my guess by 2031.
Can't make the acquisition happen, get acquired yourself. Very good. All right. Well, thank you, Jan. That's a wrap, fools. Thank you to Acorn Energy CEO Jan Loeb for his time and insights. Fools, if you have a comment, if you have a question, please drop it below. In the meantime, thank you so much for watching. We appreciate it. Fool on.
Thank you, everybody, for watching. Rich, thank you very much. Great questions. I appreciate them.